Good afternoon, everybody. This is Bryan Caprice, an instructor over at Major League Trading. Just first, let me start by saying I appreciate you guys joining me today. If you were registered with us last week, we had a little bit of technical difficulty, so I'm glad you came back this week. To make up for it, I'll add a little bit more to you. I think you'll get a little bit more out of it today. So today, our talk is going to be on understanding the basics of Nadex spreads and really why you should be adding them to your trading arsenal. When I first started, when I first found Nadex, I really didn't know much about it, and I started investigating, and I always saw this second tab called spreads, and it's kind of like, what is this spread thing? And to be honest with you, the more and more I trade over at Nadex, the more and more I find myself on the spreads tab, finding opportunities over there to trade. And if you're not looking at it, you're not doing yourself justice in trading. To be a full-time trader, you have to be able to trade multiple asset classes, have multiple things that you focus and specialize on. And for me in particular, this has just been another one of those things that I've added to my trading arsenal, and everybody that I talk to and everybody that we teach over at Major League Trading, we recommend that they also look at spreads and learn how to trade them, okay? With that being said, let me tell you a little bit about myself so you guys kind of understand where I'm coming from, what I've done and what my background is. Beyond what's on my basic, Nadex bio here, I'm an instructor at Major League Trading, and I'm also one of the co-founders of Major League Forex. I've been trading for a long time, since basically right around 2000. So I've had some great timing, 2 crashes, got to do a lot of different things inside of the market and learned a lot of different asset classes. I started right when I got out of college. So what that did is I kind of went through some of the bumps and bruises that people ran into. I, like everybody else, I was drawn towards the stock market, and I started trading that, but realized very fast that I just didn't have the capital to trade in that market. I had time, sure. I was in college, I was right out of college. I didn't have the money to do it. I thought I had the knowledge, but again, at that time when everything just crashed, it was kind of not hard to make a little bit of money when things went up. But it really wasn't the best place for me to be, and I realized that very fast. I got in trading options because I figured, hey, if I can start using leverage, now I don't need all that capital that I thought I needed before, and I can start trading. And I felt very blessed that I learned how to trade traditional options because it taught me a lot about rights and obligation and risk. For me, one of the biggest things I focus on in trading is my risk. You could learn 8 million setups, and if you don't understand the risk that's associated with them and the money management associated with them, they don't work. So I went in that route, and then I found foreign currencies and went over there. And I've worked with traders for a number of years. I worked for one of I used to work for one of the big investment companies out there. I won't say their name, but they're still out there. They're one of the big 3. And for the last 8 years, I've worked on basically educating people. And what I found is people have different kind of backgrounds and different risk tolerances. And if you don't learn what's meant for you, you're not going to be successful. And one of the reasons why I told Nadex that I would gladly come out and do this webinar for them today was the fact that it doesn't matter if you're a new trader or you're an experienced trader, or if you are good with computers or bad with computers, spreads are excellent, okay? So I found that this is one of those things where I can kind of have my mission of helping other people learn how to trade the markets, doing it in a safe way, or a safe as possible way. Obviously, there's risk in this, and you have to respect that. And this is something that I really enjoy. I am the father of twin boys. I was just actually talking to Chip about that. I have 8-year-olds, so they keep me extremely busy. So I'm not one of these traders that sits in front of the computer for 12 hours a day. I drive my sons to school every day. I pick them up. I actually have a little one on the way due May 29th. So a little girl. So life is very, very busy for me. So once again, it's one of those things that, I do as much as I possibly can. And, family is important to me. So I'm not going to give you or talk about a strategy today that's going to keep in front of a computer 20 hours a day. With that being said, before I dive into any of the actual, content, let me go through the risk disclaimer. It's very important to understand this, not just for legal reasons, but for my own personal reasons. I want to make sure that you understand that there is risk involved in all trading. And I'm just going to read it off the screen if that's okay. Trading on Nadex involves financial risk and may not be appropriate for all investors. I'm going to pause for a second. With that being said, there is not one asset class that exists in the world that is perfect for every single person. My honest opinion, though, is this is one that meets a lot of those people's risk tolerances. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Okay, past performance is not necessarily indicative of future results. Nadex instruments include forex stock indices, commodity futures, and economic events. Now, Nadex binary options and spreads can be volatile, and investors risk losing their investment at any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost of their entry of the transaction. Nadex is subject to U.S. regulatory oversight by the CFTC. Okay, some important things I want to point out in here is one, this last kind of section here, where it says due to the limited risk, you cannot lose more than the cost of your entry or the entry of your transaction. Very, very important. Okay, if I have any futures traders out here, or even stock traders, if you guys start shorting things, you can lose more than what you have in your account. Nadex, you can't do that. It's a big reason why you guys should be here. Okay, I'm not going to take too much away, but let me jump into the agenda. All right. So what I'm going to do first is I'm going to kind of cover the terminology, understanding the language. If you're here, you probably don't know a lot about spreads. I find even at my, at my own education company that we have a lot of people that come to us that have traded binaries with us even before I got there, but they're totally clueless about spreads. So it's kind of a mission. So I'm going to cover the terminology you need to know to understand and talk intelligently with somebody else about binary spreads or Nadex spreads, just so they make sense for you. I'll talk a little bit about kind of the terminology associated around how they're built. I'm not going to go through the step-by-step process. It's very complicated. I'll give you a website if you guys really care. It's a bunch of different averages, and it's not really necessary to know. Just understand when we're talking about kind of the terminology associated with it, floors, ceilings. I'll go through that. I'll talk about the available markets, and this is an extremely important section. Again, I don't care if you guys are brand new to this or you're already experienced traders. Maybe you've already made your $2,000 in the futures market already by one. When I go through the available market section, you should be having kind of light bulbs that go off about, I can trade that here? I didn't know that. Okay, I'll go through a spread breakdown example. Again, I'll use the terminology, I'll explain it to you, and then I'll run through the benefits of why these are so important for you to trade. And then I'll give you two different examples. One that came from this morning, and it played out great. It was an example that we had from last week, but it played out again today. So I'll show you kind of a live chart and break it down for you so you can kind of see the benefits of it. The first time that I did this kind of breakdown myself with an actual spread contract, live time, and I saw it, it met all my trade requirements as far as what I was looking for risk, for reward. And again, hopefully those things match for you guys as well. Okay. So let me go through the terminology, the language of things. All right. So first thing, you guys should know this if you're trading, if you're brand new, is a stop loss. So it's terminology most people get, Bryan, I got this. Okay, a stop loss order is basically nothing more than a trigger. Okay, if you're trading the futures market or the forex market or the stock market and you put a stop loss in, that is not a guarantee of how much money you're going to lose. Okay, what that is that is a trigger. Okay, what it does, it says if price hits this level, say $100, right? That's the price of the asset. If it hits $100, send in my market order now to get me out of the market as fast as you can. Well, the problem is, and this is where stop losses don't work exactly how people think they do, if price gaps pass or flies lower and you can't get filled, you will actually get filled lower than what your stop loss was. It's called slippage. Okay, it happens. But here's the thing. If your account is over leveraged and you lose more, you're now breaking all your money management guidelines. Okay, stop losses are not guarantees. Okay, when I talk about stop losses with spreads, they are a little bit different. Okay, and that goes into number 3 here. Okay, so I'm going to pause for 1 second. Let me cover what a floor and a ceiling is. Okay, when you're given a spread, you're given 2 different numbers. And if you've traded options in the past, you understand kind of like a bull call spread, kind of how they're defined. You have, buying one, selling one, and you have a range. Okay, now with these ranges, okay, it's kind of built like that. It's predetermined or predefined risk and predefined reward. And what I mean by that is when you get into a Nadex spread before, and I'll show you an entry ticket in a second here. When you get into one, when you know what your maximum risk is going into it, okay, you can't lose any more than that. If it says that it's $12, you cannot lose any more than $12. It could go to 0. The markets could completely implode. You cannot lose any more than $12. Okay. Now, there's also predefined reward. Okay, because it's a spread, it gives you a floor, a bottom price, and a ceiling, a top price. Okay, if price goes $1 million more than the top side, guess what? You can only make profit up until the ceiling. Okay, so that's kind of the price that you pay for these. You have a predefined risk, which is common among all, everything that Nadex offers, and you have a predefined reward. Now, do you find yourself, blowing ceilings out all the time? Nah, typically you don't. I mean, it can happen occasionally if you're using a smaller time frame spread. If you're doing a 2-hour and it's a non-farm payroll, may it blow out the top side? It's absolutely possible that it could, sure. Most times though, I find that it doesn't happen, okay? And again, that's, which one you choose and choosing the right strike. There's plenty of different options. I'll kind of go into that in a second. So that's with the floor and ceiling. If you ever hear somebody talking, the example today was, I think it was 127.80, and you could have used that as the floor for one, which means it was the bottom, the lower priced of the two that they give you, or it could have been the ceiling, meaning it was the top strike price. And being it was a 2-hour binary, it was on a currency, and I'll show it to you later. It was 100 pips, okay, because it was a 2-hour. So in the example, the floor would be 127.80. The ceiling was 128.80. It was 100 pips away, okay? Simple enough, okay? Floor and ceiling. So those are two big things. Predefined risk, predefined reward. I think you guys got that one. Tick-by-tick correlation is something that's a little, I'm going to show you the example right now. I'm going to actually dive in. If you look at this, the note at the bottom down here, under the Learning Center, it will kind of further expand on these things, but let me cover the tick-by-tick correlation because this is pretty important, okay? So what I'm showing you right now is the contract specifications for forex, okay? This is extremely important to understand, and even though I've been doing this now and trading binaries and spreads for a while, I still find myself going back and looking at the contract specifications all the time. And if you're not doing yourself justice, okay? This is the contract specifications for the spot currency market for the euro dollar. Okay, the Euro USD, okay? And what it does is it labels out the number of contracts that are available, and it talks about whether they're 2-hour, 5-hour, daily, and it kind of breaks it down, okay? It gives you the range, and this is where we talked about the pips. So in 2 hours, the very, very top line, okay, if you guys can kind of see my cursor moving around, see this top section right here? It talks about the range of 100 pips, okay? 100 pips, there's 3 contracts offered, so you'll have the option. And again, I'll show you that in a second, okay? This is the example that I'll show you from this morning. And if you look at the top, it'll show you that the tick size is 1. So when we say tick by tick correlation, what it means is for every pip, it is a $1 tick value, and it is a 1 pip increment, okay? So look at the bottom here. Here's 2 examples that I gave you. The first one being the Euro USD. Now, you can see this pinkish box with the -1 next to it, right? This means that I sold 1 spread. What I did is I sold, this is the daily because it's a 3 p.m., okay? The 121.20 to 123.70, okay? Now, how do I know it's a daily? Well, you can see right here. Daily, Monday through Friday, 3 p.m., 250 pips. If you add these two, you can see 120 to 370, 250 pips. So in this case, by tick correlation, what I'm trying to show you here is that we shorted 1 contract. The entry price was 123.18. Well, the price right now is 123.10. It's 8 less, right? Well, 8 less, 1 tick value, 1 pip is $8, okay? I'll go into the risk in a second, but I just want you guys to understand. Same thing with the euro dollar. I'm sorry, the pound dollar. I'm sorry, I'm looking at multiple things. The dollar yen, 107.10 to 108.10, 100 pips. This was a 2-hour, right? Because it would be up in here in this range. Now, each currency pair has its own contract specification, so make sure that you check. But same situation, okay? 107.25, I purchased it. It went up to 107.35. That would be 10, which equals $10. Now, again, this is just, I'm using these numbers for simple math. The increments, how much they move during a certain time period, it really depends on what's going on, whether it be news, not news, market open, market close, all those things matter, okay? So that's just an example of currencies, okay? Just to give you guys an example or kind of an idea of what's possible, when you look at the euro dollar, okay, the euro dollar typically has a daily ATR of 85 up to about 100, okay? During like market hours, fast moving, when we have the overlap in the mornings between I'd say 8 a.m. and 11:30 a.m., that 3 to 4 hour window, you'll typically see most of that ATR. You'll see top to bottom of about 50 pips, okay? So these 2-hour spreads in the morning are ideal if you're sitting down trading. Now, if you're a futures trader or a stock trader and you're new to this and you'd like to learn how to trade currencies, this is a great way to do it with low risk, okay? Because remember, it's predefined risk, okay? The example I'm going to show you later today, it was a trade that I looked at this morning, had approximately about $9 to $11 worth of risk for a 2-hour binary, okay? So basically 9 pips risk to be able to make, the opposite, 91, 92 in the other direction, okay? So here's another example. Now this is, this is on the Wall Street 30, okay? You guys can probably realize what these numbers are, right? This is basically the Dow, okay? Now in this situation, it breaks, the contract specifications are exactly the same as Forex. It breaks down what the tick value is, what the equivalent size is, and there's 2 hours, there's the daily ones, and there's the different ranges. And the ranges are important too because that changes the price and the risk of these things, whether you're buying or you're selling. And you'll see there's 100, 300, 400, 800, and it gives you the actual trading hours, okay? At the bottom, here's another situation. I purchased, correct? Because it's not red, it's blue, right? +1, got it at 24,340, right? So this one, I got about 40 into this spread, because remember, the floor is 24,300, the ceiling is 24,600. Okay, so I got this one a little bit in the money already, right? It was already inside. But what it did is it moved 100 pieces, or 120 actually, 100 ticks, and it's $120 profit. This is just on a single contract, okay? Now this one, because it was already in, there was a little bit more risk, but here's one of the benefits of the spreads. You can get out of the spreads anytime that you want. So if you had placed this and just obviously walked away, me entering at 24,340, I had 41, basically 41 ticks worth of risk included in the spread if I just walked away. Now, could I close it down if it went against me 5, 10, 15, 20 points? Sure, I could absolutely take my 5, 10, 15, 20 loss, whatever I was getting in at, and be able to walk away for the rest of the day. So a lot of great potential in these things, and this is just a standard contract. Now, since January, I don't know if anybody out there, and I can ask a poll question if you like, but does anybody know what the average movement? You guys can just type this in the chat, and I'll kind of give the bonus points to the person who gets it right. But what is the average ATR of the Dow since January? Okay, see if anybody knows this one. It was less before January, but once January happened, the volatility has spiked and gone up and been much, much higher. I want you guys to get an idea of really how powerful these can actually be, okay? This trade here had about, I think it had about $40 risk when I got into it. I ended up getting in late to take some screenshots, but I'll wait to kind of see if anybody, kind of answer that question of what the actual volatility is. Looking at the ATR during a specific time period is very, very helpful when you're placing these spreads. Why? Because if it's something small, say like, I don't know, say like the dollar Swiss, right? If you were trading the dollar Swiss, it doesn't move around a whole lot. So the chances of it meeting the full maximum potential of that time period are not as high. But if it's something like the euro dollar or the pound dollar or the dollar CAD that can move a lot, or even the pound yen, those things fly. That's why you'll see the spread range a little bit bigger. In this case, the Dow, the Wall Street 30, this is a great one to trade because it moves, okay? For those of you that don't know, it has an average of between 285 and 310 every single day. That's what the averages are, okay? So in this case, if it can move 300, do I have any problems taking something that is 400, 800, or 300 in a range? No, absolutely not, particularly if my risk is around 30 or 40, okay? Now, with the increased volatility, the cost and entry of these also are a little bit higher, but the margin on them is very low. Remember, when you enter a ticket, you know what your maximum is on both directions, and it's not going to be more than that, so you know what it's going to take out of your account. Now, what markets are available, okay? This is another one of those things that I absolutely love about Nadex. And again, if you're not trading over there, if you're just signing in for things, this is a big reason why you should trade Nadex, both binaries and spreads. You can trade a lot of different markets. Well, spreads are no different, okay? You can trade all the indices, the FTSE, Germany, the S&P 500, small caps, you have NASDAQ, the Dow. You have the ability to trade all those things, and the contract specifications will tell you how often they are, but there's a lot of them. Forex, you can trade all the currency pairs, okay? If you don't have a spot currency account or you're scared about currencies, again, currencies can move very, very fast. You've probably heard horror stories of God, currencies is dangerous. Well, great. Do it in a predefined risk environment. Trade some spreads. It's just like trading the spot currency market with mini lots, okay? It's a quite a safe place to start your trading. Pairs that I really enjoy trading over here is euro dollar, the pound dollar, the dollar yen, which goes off the US stock market. A lot of opportunities, particularly with the 2 hours, okay? Commodities is another thing. If you wanted to trade commodities, say you want to trade copper, or you like crude oil or gold, or you think natural gas is going to go up because it's cold winter or something, well, if you're going to do it in futures, there's a lot of negatives to the futures market. You got to figure out what contract you're on, what kind of margin, what's the initial, what's the overnight, how much are they going to take from my account, can I get a margin call, did I set a stop loss? You have all these things, especially in the commodities realm, that people aren't familiar with, okay? And you can lose an account very, very fast over there. Well, here, because you have that predefined risk, even if you do make a mistake trading something like crude oil, I mean, crude oil can get crazy with the swings, right? Over here in the spread, you can still have that same tick for tick correlation, but in a predefined risk environment, okay? And if you go to the contract specifications, it'll show you exactly how fast it moves. Now, with that being said, I like it particularly because I can trade soybeans over there, gold and silver. I will trade copper too. You know, if you keep track of news at all and you do look at those things, every time China says something about growth or production, that copper number goes crazy, you know? And the other thing too at the bottom, and this is new, you can trade Bitcoin over there. Yes, I just said it. You can trade Bitcoin prices over there. This is great. Why? Anyone ever in this room ever tried to trade Bitcoin? If it's going to go down, can you get out of your positions and short Bitcoin in a reliable fashion that's, you know, that you can do very, very fast? The answer is no. That's been the biggest problem, and that's why we've seen Bitcoin prices crashes. You just can't, it's not something you can really play reliably on the way down. Well, guess what? There's spreads. You can sell spreads inside of Bitcoin, okay? Here, there's typically one contract. It's a weekly contract, so you don't necessarily have to worry about expirations as much. But if you have a feeling about what direction Bitcoin's going to move in, here you go. Here's a way for you to trade it in a safe, reliable way, okay? And I say safe because, you know, if you guys aren't familiar with crypto, you need to be a little bit careful with where you're holding it, you know, what type of wallets. It can be very, very confusing for a new trader. But if you want to get a little bit of taste of what it's about, here's a way, and again, predefined risk, predefined reward. Get out anytime that you want. Go ahead and give those things a try. If you haven't, and for the rest of you guys out there, I was a little bit slow in adopting the Bitcoin trading over here. I like it, okay? I was kind of one of the late people in. I haven't owned Bitcoin for 10 years. I don't own Bitcoin. But for me, if you have not gotten into the cryptocurrency market, it's something that we're going to deal with in the future. Here's a great way to try it without having to lose, you know, huge amounts of money, you know, trying to go out there, wait 3 days, wait for it to settle. Hopefully they take my money. Guess what? Do it over here. Okay. This is a CFTC regulated broker. Okay. Great way to try it. So this is one of the things I'm very, very excited that Nadex has given us so many different options to trade spreads on. And if you're trading indices already, start trading forex as well, or add commodities, or go try out Bitcoin. Okay. A lot of opportunity. All right. Now, here's a couple different spread examples, okay? And I've spread them out to different things out there, and you'll kind of see them. You know, the commodities close at different times, like soybeans is closing at 2:15 and crude's at 2:30. You know, the Wall Street contracts, these are daily, so they close at 4:15, and the currencies they currently close at 3 p.m. Now, these are listed out. You can see that some of them, like the first one on the top left, the Wall Street 30, there are 5 contracts listed here, and that's again what the contract specification said. If we look at the currencies, the euro dollar, we have 4. The commodities, the you know, crude oil, soybeans, we also have 4. And it just depends. And again, what's happening is those are predetermined of kind of what the strike ranges are going to be. All right. Oh, just a correction as well. I just said it a little while ago and I kicked myself. Nadex is not a broker. They are an exchange, okay? Just there is a difference between the two. They do not trade inside of the markets, and that's the difference between them, okay? They don't trade against you. They don't make any money off of trading, just so everybody understands, just so I'm clear on that one. I was looking down on my notes, and I wanted to make sure that I said that. So examples here, guys, on the first one, 24,450 to 27,750. That is the spread range for that one, okay? The floor is obviously on the left. The ceiling is always going to be on the right. Now, sometimes you'll talk about joint prices that are kind of split down the middle. Look at the crude oil on the bottom left hand here. You'll notice that you see $76 is the floor here and the ceiling of this spread, okay? So when this is currently priced, this is one of the cool things I like to do around news, is depending on the contract and what's happening, you may not need to have a direction. You can actually look at, oh, if it goes up, I can make money. If it goes down, I can make money and take advantage of floor and ceiling prices. I will typically look for those. Those are my sweet spots. I do it with soybeans as well. The currencies, I typically pick a unit direction, one direction. Those are what I prefer, but same thing. They're all exactly the same. The left-hand side is always going to be your floors. The right-hand side is always going to be your ceiling, okay? Always focus too on the expiration. There's nothing more frustrating than having the wrong expiration put in for a trade. I will tell you, I've done that in the past too. It happens. You know, it is what it is. You learn from your mistakes, and that's, you know, it happens. So here's what a spread ticket looks like. It looks very similar to a binary ticket if you're familiar with it. This is part of the example I was building last week, okay? If you look at this, this is the Great Britain pound USD 1.42 to 1.4350, okay? It is a 2-hour spread. It expires at noon Eastern time, okay? You can see the indicative is at 142.007, okay? That 7 is a fraction of a pip. So you're basically right at the floor price. If you look down, you can see that the maximum loss of this ticket is $9, okay? So what that means is, if price goes down to 14100, basically if it drops 100 pips, the most that I can lose on this trade is $9. Say it collapses and goes down to 130, I can only lose $9. Okay. Now it also has predefined profit, right? Meaning if this goes to 145, meaning it jumps 300 pips, I still can only make $141. And where does the $141? Well, the spread is 150 pips wide. Take the 9 and the 4, there's where your 140 comes from, your maximum loss and your maximum profit, okay? For people that like to trade news, these are also pretty fun. Now remember, with news pricing, they're going to be a little bit more volatile. The prices will be probably a little bit higher. But this is a great example. Now again, during this time frame, okay, the 30-minute ATR at 11:30 in the morning is 36 pips, okay? Meaning in a 2-hour time frame, it can possibly move up to about 120 pips during that time frame, okay? That's well within this strike. And think about that. If you're risking $9 and say you just take out, I don't know, say you take out $50, that's a 5-to-1 risk to reward ratio. That's a heck of a trade, okay? For those of you that focus on money management, even if this was $10, let's do it for simple math, okay? I only need to be correct 20% of the time to be able to make, to keep my account at break even, to be able to start making a little bit of money. I mean, think about that. If I'm making 10, right, I have to lose 5 times for every one to be able to, basically be break even. Okay, that's pretty good, being right 20% of the time. And that's how you kind of have to look at these things. If you're able to find good trade entries that meet your rules for a low cost of entry, something like this that cost me $9, worst case scenario, to be able to make 141 or 50 or 100 or wherever I decide to take my profit targets from, those are great trade setups. And this is a big reason why you should be looking at Nadex, okay? I know a lot of people on the binary side, if you were taking a binary trade and only risking $9, you're looking at probably 4 to 5 strikes out. The chances of that happening are a lot less here. Worst case scenario, I lose 9, okay? What happens if it only moves, say, $9 in my favor? Well, the trade was 0. I made nothing. I broke even. What if it goes $15, $18? You guys can see where it goes. Because of the tick-by-tick correlation, this breakdown is really good, okay? So the benefits of these, again, you have protection without getting stopped out. There's no way that you can get stopped out in these things because it's inherent when the trade is put on. That predefined risk is what gives you that, okay? Now, they are limited risk, obviously, okay? They are limited reward as well. Now, you have the ability to exit at any time, and this is important as well. If you've traded binaries, you notice that you don't capture the full profit until expiration. Well, what if there's a big news event going? Say it's the FOMC notes, and say you're $120 in a profit, but you don't know what they're going to say to FOMC. But FOMC happens at 2 o'clock. The markets don't close in the binary realm or for the indices until 4:15. Could you be taking on some extra risk by holding a profitable position going into a rather large news event that has 2.5 hours to go? Absolutely, right? Well, in the spread realm, you'll be able to capture more of your profits than you would be in the binary realm because the time value is not as big. It's that tick-by-tick correlation that helps you, okay? Very, very important to do. Obviously, you can trade multiple asset classes I've mentioned before. Maybe you like oil. Well, you can trade oil with the dollar CAD, okay? It's a proxy for it. You can trade multiple things there, okay? It also has much lower margin requirement for the futures market. Now, you may say, well, how much lower? Well, I'm going to give you some homework. If you go out to the CME, you can go find what the market requirements are for margin, and it's going to be very, very confusing. And you're going to say, you know what? I'm glad that it's less. I'm going to go back to the Nadex realm, okay? Futures has a lot higher margin requirements. There's intraday, is at 1 times, 2 times. There's overnight holding margin, and like I said before, it's not necessarily the easiest thing to understand. Keep trading simple, and that's how you become profitable, is keeping it simple. The lower margin requirements over here tend to be beneficial for almost everything that I've looked at. And again, because of the lower margin requirements, you can trade multiple contracts too. That's very, very handy. All right. So here's a bringing it together slide, and then I'll actually show you a chart. This is a trade that I was setting up for the last one. And it's very simple. And if you're not familiar with the charting platform of what I'm showing you right now, what chart this is what a Nadex chart looks like. Okay. I don't know how many people have actually clicked on the three buttons next to it. Oops, it didn't scroll down. There you go. See this button right here where it says chart, and it's kind of like it almost looks like the cell reception power button, the power bar. If you click on that, this is what Nadex charts look like. So if you haven't looked at them, go over there and kind of play around with it. This is just one I set up. It was a 5-minute chart. Okay, you'll see in this spread, this was a daily. There's 5.5 hours left. Okay, the floor of this one was 120, or this is 24,300 to 24,600. Okay, so it was 300 range. Okay, now in this case, when we got in, this was the one that we saw earlier. This is just a standard moving average crossover. Okay, it's the 20 period, the 50 period, and the 100 period. And you'll see when the 100 is, I'm sorry, the 50 is actually crossing the 100, the price is up at the 24,300. So again, if you use a fast or a little bit slower or medium range moving average strategy, you could have got in right about here, okay? Where price is right now is it's gone up all the way over here, and it's moved up $106 worth for us, okay? And this is in a matter from 8 a.m. until basically right around 12. This is a daily, so there are still 5 hours to go. But could I take this position off right here and walk out with $100 per contract? Absolutely. And it was actually higher. It was actually up to about $150, I believe, at one point. Yeah, because it was almost up to here. Yeah, about $140 on this one at one point. Okay. My goal was actually to take myself out of it at 124,500. It didn't do that. So this is one that you could have held or held to the end of the day. But again, simple moving average strategy. If that's what you're going to use, in this case, it worked out wonderfully. You had the 3 crosses. It came up, went up $106. Now the risk on this trade was only about $31 when I got into it. When I started doing my analysis, the position value with the spread, I got in at 341, so it was a little bit higher. But could I have taken that off at any time? I absolutely could have. So it's just how it works. All right. So let me show you an example from this morning because I think that will be helpful for you. I'm going to drag it up here, and hopefully you guys can see that. All right. Now, this is just a charting. This is just FXCM. If you guys are familiar with them, they're a currency brokerage firm. Now, let me explain what I have on the right-hand side. All right. Markets had been doing some, kind of going a little bit sideways on the daily, but it was kind of at a bottom range. So I was looking to get long this morning. Price kind of pulled back. It pulled back into an area that I liked. So what I've done with these colors is I've actually placed the spread from this morning. Okay. If you look down here, you'll see that it was the 8 a.m. strike, right? It was the 8 a.m. to 10 a.m. Okay. Here's the range from here, 127, if you guys can see that or not, 127.80 to 128.80. Being a 2-hour dollar CAD spread, it has a 100 pip range. Okay. Here's where price started. Okay. What was the risk in this one? The risk I was looking at, it was $9. Let's just keep it $10 to $10 to make it easy, right? This red box is 10 pips down. So from here to here, if it goes down, the price could have dropped all the way over to here, and you still would have lost your $9 to $10. Okay. Actually, I guess I should probably move it up into the box. Here, I'll adjust it. It's probably more. It would be better if I did this. Okay. So there was your risk. At the expiration, the price was all the way up here. Okay. In this case, it moved up 40 pips. So it was a risk of 9 to make 40 in the other direction. So you made $31 with a $9 risk total in a spread. Okay. What was the maximum it could have made? It could have traveled all the way up to here. That was possible. It didn't in this case. But when we're talking about risk to reward, risking, 9 pips to get into this thing, to have it move 40, not a bad trade to place. Okay. And that's just an example live time it would have looked like. I always get people that say, well, I can't find $9 ones. Well, had you looked this morning at 8 a.m., you would have been able to get into a trade like this for $9 had it met your entry requirements. I employ you tomorrow. Go do the same thing. Go look at 2-hour binaries at 8 o'clock tomorrow morning before you go to work, depending on where you're located. 7 o'clock if you're in Central Time. Go see what the actual risks are on these spreads. See if it matches any of your actual trade strategies. Again, $9 risk, maybe you take 2 or 3 contracts, risk $25. I mean, that's, not too bad. Had you made $100 in the other thing, the other direction, or, at the end of this thing, doesn't turn out to be a bad day, depending on what your daily goals are. Like I said, is it going to happen every day? No. Could you take a loss? Sure. But if you take a $9 loss, it costs you a Starbucks or something like that. So again, that's just kind of looking at these things, live time. That's why I like this example the most, and because it goes, longer price period. You can trade some of these overnight as well. I actually do enjoy trading these nighttime. I get that question, can I trade these at night after I get back from work? Sure, there are 2-hour binaries that you can do at night. Just understand that at nighttime you have less movement, so your risk will be small, but your profit potentials are also small. But that's just how these things work. All right. So with that being said, that kind of concludes what I'm going to cover today as far as why you should be adding them. I'm gonna leave us on the benefit slide again. Biggest thing is, remember, you cannot get stopped out with these things. Your risk going in, that predefined risk, is the most you can lose. The fact that you can trade. Whoops, I kind of killed everything there. I guess I killed it. The fact that you can trade anything out there with indices, currencies, commodities, and with Bitcoin inside of those predefined ranges is kind of a huge benefit. Like I said, I would look at everything if I were you, okay? And find the opportunity that best suits you, all right? So with that being said, Chip, I can turn it back over to you if you like. Thank you guys so much. I really appreciate you guys all being with me today. Hopefully you picked up something good, and my ultimate goal is that you guys will go out there and actually go to the spreads tab, look at the opportunity, and start placing some of these screens out there. Thank you so much, everybody.